In the case of a new chart of an asset just beginning to trade on the market, there will naturally be a short wait until ATR is available. Here, ATR with the usual setting at 14 requires at least 14 days to pass before the first ATR value can be displayed. Let's mark some of these levels near the highest closing prices so far. Before we get to the main topic of this example, here is a review of those familiar characteristics that usually take place during and following sudden and sharp movements. The marked area from 43 to 60 can serve as a good approximation of the main boundary into new record high territory. With the broader context defined, let's focus on this short-term development and see how ATR can be applied. With that initial green spike up, price rose well above 3 times the ATR of the time, and as we've seen before, after moving beyond the range of 3 ATRs, even an initially strong move can instantly become overextended, especially upon contacting a major resistance area such as this. This makes the current flatter price movement and drop in ATR even more natural. Then going ahead to this spike, we could expect more of the same to follow, especially with such a bearish candle. However, expectations aren't always in line with reality, and that's why it's even more important to pay attention to short-term developments. The key feature here is the virtually unchanged ATR, combined with neutral to increasingly bullish movement of price. Though with this next candle, pay attention to where price closes. It's certainly been a series of strong short-term bullish movements, but there's still yet to be a closing price over 60, which is the final part of this larger boundary. And now with the more familiar ATR characteristic of flattening and falling values, more sustainable bullish strength for a decisive break over 60 gets called into question, especially with price going more bearish to neutral, which results in price being little changed, while a moderate yet stable downtrend progresses during the shallow decline of ATR. And with markets outside the stock market, which tends to have more regularly defined hours, going to an intraday time frame can still see many of these characteristics we've seen with sudden and rapid price movements, though they may not happen at regularly defined intervals such as the opening and closing times of the stock market.